Hello and welcome to Wrestling with Real Estate, where we look to chokeslam all your real estate problems. I'm your host, former WWRE wrestler and now Cirque du Soleil performer, and of course, multifamily real estate investor, Barri Griffiths. Now we have Luc and Barri with us today. How did I do on that one?
That was awesome. That was exactly how I say it.
Okay, perfect. I got a running joke that I'm horrible with surnames, so I got another one in the bag. I'm pretty impressed with myself. So, hey, Luc, thanks so much for making time today to get on this show and talk to us today. I'm excited to jump in. Before we kind of do you want to give us an idea about your background, what you've been up to, and what you're up to now?
Yeah, definitely. So as far as real estate is concerned, been an LP for the past 3 years in about 450 doors over in San Antonio, Texas. And about a year ago, my wife and I, we were talking and we were thinking, okay, well, we want to be able to do more and have more and be able to bring our community along with us with building wealth and be able to get income through real estate. And so we decided that we're going to move over to the active side of things. And that's where the podcast got started with Make It Rain. That's where Make It Rain Capital got started. That's where the move to Texas ends up coming from. And that's where it all ends up coming from. So that's like a pretty brief background, really, really quick, high level overview for you.
That's cool. But what I like about that is it's clear, like you guys have identified your goals, right? You've figured out what you want to do, and everything else kind of falls in place for that, right? The more clarity you have in terms of what you want to do. So you have the podcast, right? You have the name of the company, right? You guys are moving to do it, right? It all aligns with what you're trying to achieve. And I think that having that clarity is so important because it's easy to get lost because there's so much information out there, right? Every podcast you up on whatever it is, right? And it's like, oh, this sounds good, and and even in multifamily, like, there's all kinds of different stuff you can even do in multifamily. So to have that clarity, I think, is awesome.
Yeah, definitely. I mean, I started writing down my goals. So when I say goals, I mean like goals that could take me 10 years to accomplish, right? Like these really, really big goals. Some of them it'll take that many years to accomplish. Others I'll never really accomplish because inherently they're not accomplishable. Like I write, I have a happy, healthy, and supportive spouse. It's like, how do I accomplish that? I mean, it's like literally a day after day thing. So I think I started writing those down about 6 years ago now. And that's sort of just in the mornings, I write those down as part of like some other stuff that I do in the morning. That just keeps me aligned and overall just like continuing to head in that right direction, having those goals day after day, year after year and all of that.
Yeah, absolutely. That's cool. Well, going back, you said you started investing 3 years ago as an LP. How did that come about? What made you go as an LP and, was that your first ever investment? Had you invested before that?
Yeah, that really was. I mean, I'd done other stuff like I was like 23, 24, like messing around with options and investing in Luxottica, which owns, Ray-Ban and every other sunglass company out there. So like that was just like day trading stuff that I was messing around when I was younger. And that the real first investment was as an LP, like I ended up mentioning. And so that connection ended up happening because one of my roommates, and he was a really good friend from undergrad that I had, he had a connection to one of the GPs on the lead sponsorship. And so, we kind of got connected in that way and we were talking and real estate was already on my mind at that point. I was already sold at that point on putting money into real estate. It was just a matter of finding the right team, like the right fit. And so that's really how it came about. It was like that degree of separation there, Barry.
Yeah, that's interesting. It's a bit of luck, but also being open to it, right? Like having your roommate know someone like that, but at the same time, there could have been a million different people that were roommates with that person that might never have been shown that interest, right? It was being open to that opportunity.
Yeah, that's true. It's kind of like, it's, I think sometimes it's easy to say, oh, well, success is all just because of me and what I do. And, it's like, but there's a lot of just like luck, or it's like, I'm lucky to have just been born in America even, and like my parents both ended up having degrees. So like that helped along the way, just if you look at numbers and socioeconomically, you know what I mean? So it's all these things that are outside of our control, but then there's a hell of a lot that's inside of your control. And so it's like, it's a combination of the two. I feel like you can't feed into your ego too much, but then also you can't just say, well, there's all this stuff outside of my control that I can't control either. But then also realizing, hey, it was just good timing. It was like providence, you know.
Yeah, no, that's very well put, because you know it takes luck is such a bad word, because it means that you just got lucky and that was it, right? There was nothing else involved. You were open to that opportunity. You kind of pursued it. You went spoke to this guy, you know, and eventually ended up investing. So that's kind of cool. But what was it about investing in multifamily and investing as a limiting partner that appealed to you more than flipping or buying a single family residence to rent out yourself?
So I didn't like flipping because it seemed I'm more risk averse by nature, just like my personality, my temperament. And then, like also I majored in engineering for school. And so that's even more risk averse. And so like the flipping thing, it can work for the right person. But for me, it was just up and down. It felt like it would be up and down. And if you get caught with your pants down, so to speak, then you can end up just losing a bunch of money. That's just part of the deal, ultimately. So I didn't quite like that. Also, it seemed like super labor intensive, and I wasn't on board with that early on. Maybe 3-4 years ago. As far as single family, my parents they were renting out two single family residences. One of them I grew up in until I was like 5, and then the other one until I was about 18. And so they were renting those out. I just saw all the issues and problems that they had. And I just wasn't on board with that. Granted, a lot of that is like management and ownership and how much they were involved and like business plan and all of that, right? It's more than just that. But I ended up thinking, okay, even at the basics, if nobody's renting it, then you have zero revenue. If somebody's renting it, you're 100% occupancy and you have all of your revenue, right? And I just didn't like that. I'm one of those people where it's like, okay, I don't want to, some things need a cash flow at the very least, and I don't want to be losing money month over month, because it takes so much time and energy to end up building up capital, especially early on if you don't have equity in something or ownership. And so I don't want to throw that away, you know what I mean? And so that's why I didn't like those things. But for multifamily, it's a lot of those reasons that I didn't like those other things, or why I like multifamily, Barry, where it was very recession resistant. I would say it's not this up and down, it's not volatile in the way that those other asset classes are. You can actually have like real professional management on there, and they're like a partner. And so it was that, of course, with so many other things, and that's what really attracted more to me. And then also it's just more doors. And I was thinking, okay, well, if there's more, why wouldn't why would I go in there and have a bigger, I guess, the smaller piece of a big pie, rather than have the whole pie of like a very, very small pie,
Yeah, no, I agree. It's better to share a bigger pie and get a bigger, smaller pieces of a bigger pie than just to have the whole pie to yourself, and then you're relying on yourself, and there's all kinds of issues that can come up with that. So yeah, I'm with you 100%. But were you looking at multifamily at the time, or was it just had you heard of syndications before? Because I feel a lot of people, they don't always hear about it, right? It's like you tell people and they're like, wait, really? Wait, this is a thing? This is not like a Ponzi scheme or like some kind of made up stuff, right? It's real. And so had you heard of it before?
That's a good question. I don't know if I'd actually ever heard of it before, because my model of multifamily that I had in my head was kind of like this rich dad, poor dad model of much more joint venture based, where everybody who has equity actually has like a voting rights, and it's a general partnership that completely owns it, rather than having limited partners. So I hadn't really been exposed to it up until that point, surprisingly enough. But I didn't see the concept that different from having a limited partnership stake, so to speak, in like a public stock or a public equity. It's the same sort of idea, right? Like there's this 10 million, 50 million, $100 million asset, and you're owning a portion of it. Or if it's Apple, you have a portion of $1 trillion company. And so it kind of made sense to me in that way. But it also felt like there was much more control that the ownership group had, because they didn't necessarily have to be at the whims of the public markets, and like the valuation wasn't going to change simply because somebody says something on Twitter, or like there's a bad shareholders meeting, or things like that. So I understood it from that side of things. And so I don't know, it kind of ended up making sense to me, and that by that point in my life, I was ready to start investing. Like I was 28. 27 at the time. Like I was ready at that point. I'd kind of like, gotten through the mental hurdles and all of that.
Yeah. Do you do any vetting of the syndicators on the first one, of the general partners, or did you just hear about it? I was like, all right, I'm in.
Yeah, no.
You needed to vet them.
Yeah, I did a lot of vetting. I did a lot of vetting for sure. I mean, meeting with them at the very least was part of it. So one of them was there in LA at the time. Actually, he's still there. And then the other partner, he's over in Austin. And so met with them, or met with one of them, I should say, and then did some background checking on him. Nothing like super formal, but enough to give me some surety. And then I ended up I'm like an engineer. I'm like the nerdy engineer by nature. So I ended up taking their underwriting and did my own underwriting and did like sensitivity analysis just to figure out, okay, well, how far does revenue have to drop? How far does occupancy have to drop until this thing doesn't cash flow anymore? Because I was thinking from like that Warren Buffett standpoint where it's like rule number one of money is don't lose money. And the rule number two is follow rule number one. So I'm thinking, okay, well, if it doesn't cash flow, that's okay. I can understand that. It should. Obviously, their business plan, they were very conservative in a lot of what they were doing with their underwriting. But I didn't want to lose equity. I was, it's like you work too hard, like you're trading all this time for this money. And then I didn't want to go in the opposite way. So there was that. Actually ended up looking up the property management company, did some vetting on them just to have some more familiarity too. And then we secret shopped the deal. So my wife and I, we secret shopped them too. So we actually flew out and we took a look at them. And I wanted to see, feel, touch, that's just me. That's just what I did. Yeah. And that gave me a lot more surety because I want to see like, okay, what kind of cars are here? Like, what's the tenant base like? Just get a feel for the area. How is the property manager from like a customer facing perspective? So I probably did more vetting than most limited partners, but it was also like my first deal that I was ever going into and putting money into also. So I wanted to have a lot of surety around it, Barry.
Wow, yeah, you did. You did a fair share of it. That's awesome, though, right? You're giving away your heart, not giving away, but you're investing your hard-earned money in this asset and in this group, right? And you're trusting that they're going to take care of it, but you want to trust but verify. And it's awesome that you took those steps, right? And I think that's testament to your character as well, right? It's like it's not easy to wire money, but it's okay. You look at the package that they sent you, you have a conversation with them, and you're like, all right, this is good. But it shows you that you're willing to go above and beyond to make sure that everything is as it's supposed to be and understand it. So I think that's awesome. I think it's great that you did that. So then the next two times you invested 3 times total, right? Is that correct? 3 different deals?
Two times total.
Okay, so the next one you did with the same group?
It was with the same group, and it was the following quarter actually, and then I put in double the amount on the second one as opposed to the first one. Yeah,
that's smart, right? You put the least amount in the first one, see how they do, judge, you know what I mean? And then if everything goes well, then you can kind of double down and kind of go from there. How have you found it to be? Has it been what you expected to be? Has it been better? Has it been worse?
Yeah, it's been, I mean, like rule number one is like, well, am I getting my distributions quarterly? So that's a big part of it. So, I mean, it was, I don't know how to explain it, but it was such like a sense of like accomplishment once I actually got like a check in the mail. Cause it's like, okay, like I'm moving forward. Like for me and my personality, like I'm very big on like making progress, right? That's when I feel like I'm most happiest, when I'm making progress and there's some progression there. And so that was a big thing. That meant a lot to me because it was like kind of like this process coming to fruition, and then all the communications have been solid for sure with them, and they provide a pretty good amount of detail, I would say, in their monthly and then also their quarterly reports that they provide. And so far it's been, I mean, as a limited partner, it's definitely been good, and they've been open to having conversations about whatever it might be. So it's definitely been really good.
Yeah, that's cool. They've paid distributions throughout COVID. Everything's been.
They paused in Q2. They had an operating account that they also raised equity for, but I mean, nobody knew what the hell was going on at the time. So they paused, and then they picked back up in Q3.
So did they raise an extra operating account on top of what they originally raised after COVID hit, or was that part of the initial business plan?
That was part of the initial business plan, yeah. So they were really, it was probably about 40% of a raise, and then the balance was levered. And so they raised the capex, and then they also raised the operating account. This was before, operating accounts were required by Fannie and Freddie.
Mm. So I've just realized we've got in about 10, 15 minutes talking about this. And for anyone not listening, for anyone listening who doesn't understand, maybe can you break down what a syndication is? Just a high level what it is, because I just realized we were talking. So I'm sorry if someone's been listening and you're like, what is syndication? What are they guys talking about? So maybe you can break it down from a high level.
Yeah. So from a high level, it's a group of people coming together to end up purchasing an asset collectively with all of their capital that they wouldn't be able to otherwise. And typically it's split into active and passive. So the active partners, they run the deal, they make sure that all the passive partners are going to make sure that they get their money. And so because of that, the active partners end up getting compensated in different ways. It just depends on the group and how they structure things. And then the passive partners, they put their money in and then they get their distributions, their dividends on a consistent basis. Typically, obviously that depends on the way that the group structures it as well. But I would say that's it from a pretty high level. And these, I would say, they exist in different ways for syndications in different ways, but that's how it works for the most part for apartments.
Yeah, that's very well put. Because it's not always easy to. It's an easy concept once you understand it, but it's not always easy to explain. Right? I always have trouble explaining it. I get my tongue in the twist trying to explain it to some people sometimes. But yeah, that's really well put. It's just essentially people pulling together their resources. Some people putting in their time and effort and expertise, and other people just simply putting their money. And the people putting the deal together, those that are active, they're the ones that make all the decisions, and the people that put in their money, they're called what is known as a limited partner. So their involvement is basically limited. That's kind of the best way. I always remember it. They put the money in, and they hopefully get the distributions every month or every quarter, and at the end when the property is sold. But outside of that, their job is to make sure that their money's in the bank account every month, or every quarter, whenever it's kind of and it's a great thing, because then you get to participate in this large multifamily deal that there's 1,000 benefits to investing in multifamily, in my opinion. We could be here all talking about that, but it's such a great concept. I think so. It's a syndication model. I think for people for many different reasons.
Yeah, I would agree. I mean, I think it kind of, in a lot of ways, it kind of like democratizes this wealth building vehicle that's there, because you can, let's say you have 50 grand and you're going to put it into a syndication, or you're going to put it into I don't know, a fourplex or a duplex somewhere, obviously not California or Vegas where we are right now, but somewhere. The tough part about that is that you have to be able to have all this expertise in order to be able to drive those returns if you're going to put it into something that is on the smaller side. But if you give up a bit of control and just outsource it and then compensate the active partners for it, then I mean, I think it ends up making sense in so many ways. It's a lot of, it's really outsourcing rather than insourcing. And then there's, I think it's a way to reduce risk as well, because you're not doing it for the first time. There's a bunch of people who are there who are experts, who have been doing it, who have the partners, who have the relationships, all of that. To me, I mean, it just makes sense. It's the same reason why people invest in, well, it's the same reason why people used to invest in the stock market. Maybe they invest for other reasons now, but it's the same sort of idea.
That's why the stock market goes up no matter what. It always goes up, right?
Right, exactly.
But yeah, it's true. Like when you're starting out, right, you don't know what you don't know, right? And you want to buy your own property and do it yourself and whatever, right? But there's going to be so many learning lessons along the way, right? So many things that go wrong and that you learn from, and that's okay. That's part of the process. You've got to expect that, right? But if you partner with someone, like be a limited partner, and you just give up that control and you use these people's expertise, you use their experience, you use everything that they've been through, you can basically it's like standing on the shoulders of giants, right? You're using everything that they've done. So you're now starting at the level where they're at. You're not going through that 10 years, whatever it's taken them to get to this point. You're starting 10 years in, because you're using them to get these returns and to do these investments. So I think, that's a cool point about.
Yeah.
What so you said though that now that you've decided that you wanted to go from the limited side, the limited partner, to be one of the general partners, the person that's putting the deal together, that's being active. What pushed you towards that decision? What made you want to kind of go that route?
I think it's a couple of things. I know that, I mean, ever since I was middle school, high school, like I always knew I was going to have my own show, my own company that I was running. I've just always had that attitude and that outlook. I knew that that was going to take place. So I think that's a big thing that's pushing me in that direction, Barry. Another thing is being able to have more time freedom to a certain extent, right? You know, it's probably going to be more work, but it's a different type of work at that point when you're sort of working for yourself and working for your investors as opposed to building equity for somebody else. You're able to build your own equity, so that's definitely pushed me as well. And a big part of it too is, you know, I've seen the power of real estate, and I think it would be in some sense selfish for me not to end up going into this and try to bring other limited partners along, because there's so much generational wealth that can be built up, and, you know, providing this access and this education there is, I mean, I think it's huge, because I know we're in like this little, you know, we're in our own little bubble, and like we think everybody knows about apartments and like syndication and multifamily. It's like so many people still have no idea about this. Like it's crazy, you know, because like you still the same faces all the time everywhere, you know. Like I recognize a bunch of your guests. Like I've seen you on Instagram. Like I know a bunch of the guests that you've had on, but still it's like this. It's still like this blue ocean that's out there to where a lot of people just don't know that this is available, and they think the only thing is Wall Street essentially, or they do it on their own, and four greenhouses, one red hotel sort of thing.
Yeah, that's. I was laughing and nodding the same time because it's so true, right? Like because I listen to podcasts all day, and because we're on Instagram and you follow people that are in real estate, and you know everything you consume is pretty much real estate related, right? The people you talk to, you're surrounded by real estate, so you think everyone knows about real estate. I do anyway. I'm guilty of that, right? But once you kind of get out of that bubble, you really realize how little people understand, right? Like you tell people you're in real estate, oh, you're a flipper or you're an agent. Right?
Yeah,
that's what I get all the time. Like, oh, so you're selling real estate now? Oh, you're flipping now? No. I'm doing something completely different. So yeah, I completely agree, because also the amazing thing about syndication, it really can change people's lives, right? And this is not show, like I don't want it to sound like we're salesy. We're just passionate about it. I'm not trying to, like, if you don't want syndications, that's fine. I'm just not trying to sell it, but I'm passionate about it, and I truly believe that it's an amazing vehicle for the right person, right? And like busy professionals, for example, it's just amazing. Like if you're a doctor, attorney, dentist, you know, whatever it may be, right? You're making good money with that job. It doesn't make sense for you to buy a single family residence. All weekend you spend fixing it up, managing it yourself. You're getting calls like when you're in ER or whatever, or when you're in courts or whatever, right? Whereas if you can take that skill that you have and keep producing that great income that you've been making, and take that, save some, and then invest it on the side, and like have that grow in itself and give you cash flow and grow over the years, and then you keep investing and you keep investing, and you get the great benefits of real estate without essentially having to do much at all, right? Vetting the people up front, but outside of that, you know, it's just, I don't know, I think it's so cool.
Yeah, I mean, my head goes two places when you were talking, Barry, because I end up thinking of Grant Cardone, and he said that like there's three things. It's like, first you got to be able to collect the money, you got to be able to keep the money, which means like don't spend it on BS, and then you have to be able to grow it, you know. And it's like between steps 2 and 3, a lot of people can start to earn, but between steps 2 and 3 of maintaining it and holding on to it and then investing in it and being able to grow it, a lot of people end up getting tripped up in some ways, I end up feeling like. And so this is a vehicle to be able to do that. I mean, the other part of it too is, you know, why don't people know about this? There could be different reasons, you know, but maybe there's a lot of people who have concerted interest in making sure that a lot of people don't know about this, because there are these tried and true, more well-known ways to end up, you know, quote unquote, like building wealth and having a retirement, you know, whether it's like, it used to be a pension, but, you know, now it's a 401k IRA, and they're not self-directed. I mean, it's just X and Y, Z mutual fund, or it's, oh, you're 22. Okay, you can go into the risky stuff. Or, oh, you're 50. Oh, okay, you need to go into more conservative stuff, you know? And it's like, you know, there's more to it than that. If that works for that person, that's great. I don't think that syndications are for everybody, like you've already said, just like public stocks and mutual funds and all that aren't for everybody. But but being able to at least people know that they have different options out there is, I mean, it's huge, because then they can end up educating themselves. They can make the best informed decisions for themselves and their families and their goals and like where they're going in the future, as opposed to just kind of getting spoon fed or force fed this like cookie cutter approach that everyone's been following for several decades now.
Yeah, that's exactly what it is. It's just like follow the path that everyone else has been doing, right? That's what most people do, right? You work your corporate job and you hopefully save enough that you can put in your 401k, and then when you're 59 and a half, like, peace out, right? You get out there and hopefully you have enough to outlive you have enough, hopefully you don't outlive your retirement fund, right? Whereas for me, there's so many things. Maybe I'm impatient, but for one, I don't want to wait till I'm 59 and a half, right? Because it's not that you're old at that point, and your life is over, but at the same time, I feel like when you're younger is when you really want to be able to enjoy life, right? You have your health, you have you have everything a lot more going for you, I guess, at that point, right? Who knows, right? 59 and a half, not everyone always sees that, right? Luckily, modern medicine has mean that we live in older and older, but still, right? It's just like, so there's ways that you can kind of get there sooner. And plus as well, a good thing about real estate is if you want to access that sooner, you can, right? Now, obviously you're in syndication, you're in it for the life of the whole of the property, so that could be 5 to 7 years, but still, if you're 30, 5 to 7 years is a lot better than 29 and a half years, so it's just crazy to me. But you've now started your own podcast, right? You said you're 30 plus episodes. What made you kind of go that route, right? I know the benefits, I love it myself, so I'm just wondering from you, what made you kind of start your own podcast?
I think it was two main things. One is, and I'll end up saying my wife and I, Daisy, like we do it together, like we're co-hosts and we have Make It Rain together. And so for us, we were continuing to have conversations with family and friends around multifamily real estate and just all the different options that are available. And we're having the same conversations a lot. And so we're thinking, okay, well, how do we kind of make this a bit easier, to where we can provide a base level of information to people. And then if they just want to know more, then they can always reach out to us and we can always like chat. So that was one thing. And then also, we were looking to expand and like to grow. And this was in early March. And then like COVID hit and a lot of times it's like it was in-person networking and things like that. And we're thinking, okay, well, how we can continue to like move the ball forward. And then it was just, okay, well, how about we start a podcast? After we brainstormed a bit, there was the idea of like a blog, but and a couple of other ideas, but really the podcast is what kind of rose to the top as a way to get the message out and to be able to continue to network. And so that's really what ended up driving it. So yeah, I mean, we were figuring stuff out for a little bit, just what direction we wanted to go, names, what we wanted to focus on. And then it launched early May. And yeah, like you said, we're about 35-ish episodes. I'm not sure when this episode's going to premiere, but yeah, we're about 35 episodes now at this point, Barry.
Awesome. Where can people find it? As we're talking about it, might as well plug it, right? We'll plug it again at the end.
Yeah. Yeah, I mean, if you type in Make It Rain Multifamily, it'll pop up. So we're everywhere that podcasts are. I mean, everywhere that podcasts are, but of course it's Apple and Spotify at the end of the day. I'm sure everybody already knows that, but yeah, we're everywhere. And you can find us on our website, makeitraincapital.com/podcast. And that's where we are. And then we're also on Instagram at Make It Rain Podcast. I'm on LinkedIn. Feel free to reach out to me on LinkedIn. I'll provide my email address. You can email me, Luc, Luc, at makeitraincapital.com. But yeah, I mean, the best way is if you search Apple or Spotify, Make It Rain Multifamily, it'll come up, or search Google, it'll be there for sure.
Awesome. I told you beforehand, I love that name, Make It Rain. Because that's everything you need to say right there, right? It's like, it's cool. I like that. You also told me, and I think you mentioned on this as well, that now you're moving, right? You're in California, currently in LA. That you're moving to where?
We're moving to Texas. We're moving to Austin, Texas. So the most California part of Texas is where we're going.
That's awesome. What brought about that move?
We were planning on being GPs about a year and a half ago. We had started having conversations together about it. And what we found is that when people are local to the market, either they're visiting their market every 2 weeks, it seems like, or they live in the market, is when they experience the most success. And that happens for a number of reasons, right? But we ended up thinking, okay, well, maybe this is a good time for us to end up looking at moving into the market, whether that's, Austin, San Antonio, Dallas. Like those are the three places where we're focused. And Austin is what ended up working out for us in this situation, although we like Dallas a lot too. We ended up seeing that's the way that people end up finding the most success early on and the quickest. And it's not that people can't do it otherwise. We know people who have done it otherwise, but then they're in the markets every 2 weeks. I mean, and that wasn't something that we were open to quite as much. So that's really the main reason for us to end up moving. And of course it's difficult, right? I mean, we have family here. We're both native Californians, native Southern Californians, like we've grown up here. And we have family, friends, all of that here. But I think if we were to look back in 5 or 10 years and not end up doing it, not trying to accomplish what we feel like we're capable of and really reach our potential, then we would have these regrets. And that'd be a tough pill to swallow, and that'd be hard to live with and hard to stomach.
That's impressive though. You know what I mean? It's one thing to take action, right? To be calling brokers, analyzing deals, and talking to investors, doing all that good stuff, right? But to literally uproot everything and move to a different state because you want to invest in real estate and you want to invest in multifamily, and that's awesome, man. I love your conviction, you and your wife. I love that you guys are doing that. That's awesome. So I think that speaks volumes again about, I'm sure the success that you guys are going to have success, right? Is just by having that commitment level, like, is impossible for you guys not to be successful. I think you mentioned her a few times now, your wife Daisy, right? You guys are partners on the podcast. She's involved in the investing side just as much as you, right? So that's amazing in itself, because it's always hard to get a spouse, right? Not, sometimes the woman is involved, sometimes the guy's involved, but it's not that often that both are involved. It's always causes a lot of problems. Was it right off the bat that she was interested, or did you have to persuade her? How did that all play out?
So I've been in, I have my work career has been 9 or 10 years at this point, and I've been working in sales for 6 of those years. And so I really had to sell. Long story short, it definitely took time. Like I was sold on it early on, but Daisy will tell you, and she'll say it on other podcasts. She said it on our own podcast. She's like, I didn't care about it. She was just like, I'm just supporting Luc, because we're very much about supporting each other and what we're doing. And she was like, I'm just here for him. Just, she's like, what? Like, I don't get it. She's like, I don't get it. It's all these like old guys, and you guys are talking about real estate and all these numbers, blah, blah, blah. It wasn't her thing in that way, but she ended up finding a group called REN it actually got started in LA, I believe. It's Women's Real Estate Network, WREN. And so they talk about all sorts of different things with real estate, but long story short, she was able to find a group that she more so resonated with. And was able to have these different sorts of conversations, because I mean, how like us as guys, we network and have conversations differently than women do. And I think if there's a room just with guys, you're able to have a certain type of conversation. And if it's a room just with women, then it's a different type of conversation, And so she was kind of able to find her tribe, and that ended up helping. And then I think once I kind of walked her through the numbers and why I was so sold on it, that ended up helping, because she was like, okay, I see this. And then once she started getting distribution checks, she's like, okay, now I really see this. And like seeing that power, and now she's committed to being able to retire her parents. I mean, they're in their mid 50s, and she wants to end up retiring them within the next few years. So that way, they don't have to work if they don't want to anymore.
That's amazing. That's so cool. Yeah. And sometimes it takes a while, right, to open people's eyes to kind of, it's not like this instant thing. Like I'm sure you were kind of like me, right? Once you kind of realize what was possible and everything that you can achieve with real estate, it's like, wow, okay, I'm in, right? I'm in.
Mm-hmm.
You don't need to convince me anymore, but other people, they need to see certain things, right? And like you said, just having a bigger goal sometimes help as well, right? That goal of wanting to retire her parents, that's amazing. That's absolutely so cool to be. And that's the power of real estate, right? That's what can be achieved, right? Like it's just unbelievable what you can start out with hardly anything in real estate and create all this, right? All these things that you want to. And it's like, I was speaking about it this morning. It's like, you can create whatever life you want for yourself through real estate, right? It's that powerful. You really can. Like, you guys, she's going to bust the backside to kind of make that happen for her parents, and it was just, yeah, that's really cool. That's awesome.
Yeah, I mean, the thing is, I look back at, my only one of my grandparents was from this country, was born in America. And my dad wasn't born here. He came from another country. My in-laws, they came from another country. And so I end up looking at like there's so much opportunity that's here, that's still here in America. And of course there's different issues that we have as a country, but even then, people from around the world have been trying to come here and working to come here and bust their butt, like you're saying, for 150 years or more. And there's so much opportunity that's here. And for me, it's like, I'd be foolish not to try to end up doing more and taking advantage of that and really like use these gifts that were given to me. I was just born here, I just, I've worked a lot, right? But there's all these opportunities that are afforded to me, and I'd be foolish not to end up doing something with them. And I think it would be, I don't know, I don't know if disgraceful is quite the right word, but it wouldn't be owing. I feel like I owe something to my ancestors, who've worked as hard as they have to be able to afford the things that I have in my life at this point, And so I think those strong whys are what are able to keep people going day after day, because it's like there's so many setbacks. I mean, that like this random stuff that happens. It's like success is like one of these things, and like hopefully you're continuing to move up. But it's like staying focused on those things and having that strong why and taking advantage. I mean, for me, it ends up making a huge difference at the end of the day. And I have that strong why, and I know that Daisy does too. And so that keeps us moving forward together in the same direction.
Yeah, it powers everything, right? Once you know why you're doing everything, right? It's one thing to have a goal, which is great. Awesome, everyone should have a goal. But if you have that why, what drives you forward through difficult times? Because there's going to be, like you said, difficult times. And you've got to have that why that's kind of bigger than you, and the reason for doing it. So as you said, you guys are looking to get on the GP side of stuff, right? Where do you? And there's a number of different roles within that GP, right? There's different holes that need to be filled. Where do you guys see yourself fitting in on that GP side? And are you guys looking to partner as well, or are you just looking to do it between both of you?
So to answer your first question, we look to make, yeah. No, it's like I've gotten, as we do podcasts, like I've gotten better at like keeping these things straight, because it's like it's a conversation, right? Yeah. But yeah, for where we'd fit in, it would be either the capital raising side that we're focused on, or it would be like that local boots on the ground presence, and or both, to be able to work that side of the equation and be able to provide that value in that way, Barry. And then we're open to we're open to lead sponsorship. We're open to like fitting in to the right group at the right time, with the right partners on any deal that we feel like really makes sense. And we are focused in those local markets that I mentioned. I mean, with us living in Austin, we're an hour and a half away from San Antonio, and then we're about 2.5, 3 hours from Dallas. So it's like that's where we're focused in that area. And so that's where we see ourselves lead sponsoring or getting in on a partnership with other GPs at this point.
Yeah, I'm sure you can do the underwriting as well, right? If you said you're not scared of numbers and spreadsheets, probably.
Yeah. Oh no, I mean, like the kind of math that I needed to do to finish. So I have to finish like the master's in engineering. It's basic arithmetic at the end of the day. It's just a matter of knowing the deal like the back of my hand. That's the next step, right? Is like knowing the deal inside out. You know what all the metrics need to be. You know where R&M needs to be, and you know where your taxes and insurance are supposed to be, and all of that. So I'm not too scared of the adding, the subtracting, and multiplying, dividing part.
You're different to me then.
Hey, but that's the thing. Everybody has their own strengths, right? Because it's like I'm like the underwriter, but Daisy's like I said before, she could care less about it. So she ends up focusing on these other pieces that I don't have as much of a strength in. And I'm sure for you, it's like you have these strengths, and like you're a showman, right? Like you're very charismatic. Like you came on and you're doing your intro. I'm like, damn, this dude's like, boom, he's like ready to go, So it's like everybody has their own strengths, and that's the beauty of it. Like you said before, we can all end up finding the right partners.
Yeah, there's room on the bus for everyone, right? You just got to find your place on that bus. Yeah, awesome. Man, this has been fun. This has been a fun conversation. But get to the part of the show where I ask people 4 questions at the end. They're wrestling-related real estate questions. So the first one is, what would your wrestling name be? If you picked a wrestling name for yourself, what would it be?
A couple floating around in my mind. I don't know. I end up thinking like the Thunderstorm or something, because that works with Make It Rain, like maybe the Thunderstorm, or we'll just go with that. We'll just go with the Thunderstorm or the Flash Flood. I don't know.
A Flash or something like that. The flash,
Yeah.
the flash. I like the flash. I like the sound of that. So every wrestler has a special move, right? It's the move that they hit in the match, and when the match is over, it's their biggest strength. What is your special move in real estate? What is your biggest strength, do you think?
I would say I think my initial gut feels to go, underwriting, but I would say more so than that, it's networking through social media and networking like in the online space. Cause I'm more of an introvert by nature. And so it becomes much easier to me to just reach out to somebody this way and like continue the conversation through DMs or messages. Or be able to like leverage LinkedIn to be able to chat with people and be able to add value in that way. So I'd say that's what rises to the top for me, Barry.
Yeah, that's cool. That's cool. Yeah, the social media is so huge now, right? It's just massive. It's so important in whatever aspect of business that you're involved in. What's been the biggest body slam you've taken so far, you think?
Yeah, I would say it's it's really understanding that like how much ducks have to be in a row when you're submitting an offer, and then when you're really working to get to best and final as well, and when you go through the due diligence process. I mean, there's a lot. It's a very simple business, but there are a lot of moving parts to make sure that like this deal is going to work, so I'd say that there was just an experience. What was it? Yesterday we got moved to best and final on a deal that we were looking at, which was awesome. But then we ended up realizing as we're looking through stuff, it's like, okay, like I would be doing a disservice to myself and to Daisy and to our partners if we were to like really move forward with this. So it's better to be able to have a conversation with the broker and just say, long story short, now's not the right time, but we're continuing to be open to opportunities and work that way. So I'd say it's that definitely a learning lesson for sure, which is bound to happen.
Yeah. How many units was that, out of interest?
That was, I won't give the exact number because it'll be easy to figure it out, but I'll say it was between 2 and 250.
Oh wow, okay. Good size deal then. That's cool.
Yeah.
I respect that honesty and that respect that integrity, right? And that, okay, hey, I don't know if we're there yet, right? And just realizing that it's better to do that than go through the deal and be like, oh, okay.
Yeah.
Now we're in trouble. We got this deal under contract. Now we've got to do all this stuff, and I don't know if I'm there yet. So I appreciate you sharing that. Was there a moment that you were standing on the top rope getting ready to jump, but you were too scared? What was it, and how did you overcome it? Maybe the last situation is one, but maybe if there's another one.
Yeah, that could be one. I mean, one of it was wiring money, because when I first was an LP, it was like, it's a 10 figures that I'm sending out. And I'm like, damn, like, I was, like I said, I was ready, but it's not like, but still it's a new process. I'm wiring money, and it's also new. So there was definitely some apprehension, I would say, but still, thankfully ended up moving forward and overcoming that. So that was definitely one of them. And then, actually, here's a better one. Barry. I got a better one. So this is like a literal jump. So there was an event I was at recently that was in Jamaica. And it was a real estate networking event. And they had this thing called the Blue Hole. And it was literally jumping, I think it was like 25 feet down into this, I don't know, it's just a body of water. Yeah. And man, I don't play, like I don't do that stuff. Like that's not me, I like roller coasters, but I don't mess around with like heights and things like that. And so that was definitely jumping from the top rope, so to speak. How did I get over it? I waited a little bit for sure. I let everybody else go. And then I was like, man, if I don't do this, like I'm going to regret it. And so I just ended up going, and then I sent it to Daisy and she was like, who is this? Like, this is not my husband. Like, what is going on? So, yeah, I don't know. You just jump after a certain point. You just jump, like stop thinking about it, just do it. It's going to be over in a second and a half anyway. Right.
I think that's a perfect analogy for like people that are waiting to get into real estate, right? You just, at some point you've got to jump, right? And I think the longer you wait as well, I think that helps people realize like the longer you wait, the harder it is. The same when you, you're jumping off a cliff, right? Or jumping wherever, right? The longer you wait at the top and you look down and you're like, you build it up in your head. This is so high. Oh, I could get hurt, or this could happen. I could slip. Well, the longer you wait, the harder it is. So the sooner you can jump, the better it is. I'm not telling anyone to jump blind into anything, but the sooner you can jump, the better it is. So just remember that.
Yeah.
Cool.
Yeah, definitely.
Look, this has been awesome, man. It's just an insight into what's going on with you. And it's the cool thing I like is like we're getting in the early stages, right? Hopefully we'll get you back in 6 months, a year, and then in 5 years, hopefully we'll still be doing this in 5 years. And, everything will be, have grown exponentially at that point. So I'm so happy that we were able to have this conversation today. But again, we mentioned it once, but again, for anyone who's around at the end, where can they find out more about you and what you've got going on?
Yeah, it's been great chatting with you, Barry. I'm glad we're able to meet. I'm glad you ended up reaching out, and to find out more, best place is to go to our website. It's makeitraincapital.com. You can email me, luc@makeitraincapital.com. I'm on LinkedIn as well. We're on Instagram at Make It Rain Podcast. And we end up saying this all the time, myself and Daisy. It's like, if you guys have questions, like, just reach out. We actually respond back. We end up setting up meetings with people and we actually talk, even if it's like you're not an investor, but you're just wondering how this all works, or like, well, we're looking at doing this. We set up calls and we end up chatting with people. So I'd say don't be shy. We're real people too.
Yeah, exactly right. It's not, you guys aren't super gurus or anything like that yet, right? It's just like
right.
fun, easy conversation. Yeah, also. So yeah, guys, check out Luc then if you guys are interested in the call. Set up a call with him and his lovely wife. I'm sure you guys won't regret it. So awesome, Luc. Thank you so much, man. Have an awesome rest of your day, and yeah, get packing. You probably got some packing to do.
Yes, sir. Yeah, thank you. Appreciate it, Barry. We'll end up chatting soon.
Absolutely.